Hey, in this video we want to look at scalping strategy for step index. We will be considering how to scalp the Deriv Step Index, and to do that we'll be using these indicators. The first indicator is Bollinger Band. The pivot is 130. Deviation is 2.0. You apply to close. Over moving average period 25. Method is exponential. You apply to close. The moving average period is 10. Shift exponential again. You apply to close, and then we have our relative strength index. Period is 9. The style is 1 pixel. Then the background color is white, but if your background is black, you change the color to that of your background. Then we have our commodity channel index, which the period is 14. You apply to typical price, high, low, close, and then this is how your chart will look like. So to begin, we want to establish the direction of our market, and for this scalping strategy we'll focus first on the main chart and secondly on our indicator window. Now on our main chart, whenever price is below the middle Bollinger Band, it is a downtrend. And whenever price is above the middle Bollinger Band, it is an uptrend. But in order for us to validate our entry, the direction which will be taking the price, now we know we are in a downtrend. Secondly, we want to see the position of the commodity channel index, which is our indicator window. And here we can see that the commodity channel index is already crossing to the downside, which is what we want to see. If it is up to 20 or 10 level, we will not be looking for this selling opportunity. So afterward, we'll move to H1. Now on our H1, we want to see the same scenario. Now on H1, if you look at this critically, price is above the middle Bollinger Band. That is not a challenge. We have established that we are in a downtrend from H4. But the only challenge we are having now, if we must have a sell market, this level of our CCI, the indicator is already at 20 and 10. So we cannot have a sell trade in this scenario, because here is telling us that there is no much room for price to go down. So we want to see price can play around a bit in this zone, then move back to this upside, and then when it is coming back down, we can now make our entry. Or better still, if it can pull back to around this 50 zone and then give us an engulfing candle, and this engulfing candle will indicate that price pull back into this moving average, and then give on the candlestick formation in this moving average, then we will find our trade. Please, I want you to rewatch and listen to the repeat of what I just explained now. It is very, very important. If we have established that, we'll now move down to our 15 minutes. And as you can see, our 15 minute is at this level, lower Bollinger Band, which is very much valid for our entry, and indicators are at the level of 20 and 10. So now the only conflict we are having here is that of the 1 hour, which is already indicating that we are in this zone. Otherwise, with the condition of this 15 minutes, if we had gotten a bullish signal, we would have bought. But since H1, the H1 commodity channel index is not in an agreement, so it can't give us a sniper entry. So we are looking at scalping strategy that will give us a sniper shot. So that will not give us that particular strategy. Okay, so let's look at one previous example and see how it plays out. Let's say for instance, when price was here, okay, price is here and our indicator window is here as well. So move to H1. Now you can see this is H1. The condition of the H4 and the H1 are the same. You can see that this as well, all of this is at the upper Bollinger Band. Look at our indicator window, it's already crossing from the 100 zone, right? So now let's move to our 15 minute and see how we could have gotten that sniper entry. Do you see that? This and this. So this would have been a very beautiful sniper entry. Immediately we spot that candlestick formation, which is this candlestick we are seeing here, this engulfing. It could have been a perfect sniper entry, and you can see this here because of the alignment of H4. That is what could have given us this particular sniper entry. And if you come to H1, you realize that this is coming down, which shows that there is a room here for us to move to the downside. But here is already at this zone now, so this is a barrier to the sell, to the buy we are looking for. So we could have expected to pull back a little, and then price will pull back to inside these moving averages and then give us a candlestick formation. If it is at 50 or any of these zones, we would have make our sell entry. So this is how perfect it works, especially when it has to do with our step index. This will give us a sharp, precise sniper entry. And as you can see, you can now see now that this is trying to push to the downside. So this is how we can capitalize on this and then build a great strategy out of it. Okay, let's do it one more time and let's see the scenario. Look at this. Price is here. Now this is our indicator window. Look at where we are. You can see it, right? So now you agree with me that there is, since we are in a downtrend, price has already given us a signal from our H4. So we have established that, but now you see that there is a room for this to pull to the downside, for the commodity channel index to pull to the downside. So let's go to H1 and see where we just marked. Good. Now look at this. Price is already up here. We have this bearish engulfing, and if you look at it critically, double confluence here is a previous resistance zone. Price has have a resistance here, and when you look at our indicator window, you can see that price is at the level of 90. So let's move to 15 minutes and find out where is the price. Beautiful. Here is our 15 minutes. Look at price up there, and then look at our indicator window. Indicator window at this level, price is coming, and then you can see that up there we are having a beautiful bearish engulfing candlestick signal. So wait for this price action, give us a bearish engulfing candle, and then we have this from the 80 to 90 zone, and that is our perfect entry. So this is how it works. Give you sniper entry using this strategy. Very simple and straightforward. Another continuation scenario, as far as price is coming from that zone, any other continuation you want to take is for price to come down and then pull back to the moving averages, give you an engulfing candle, you sell, just as what we are seeing here. In these scenarios now, you see that price will now pull back, come back to the moving average, give us a signal, we continue to sell. Here now, price pull back to the moving average, and then we'll continue to sell. So this is how it works, and I believe you have found this video very helpful. Thank you for watching the video, and do not forget to give the video a like, a thumbs up, subscribe, turn your notification bell so you'll be the first to get notified when we upload our next video.